Hi guys. Hi Yahya, how are you? Hi Morania, saying both will crash. Jose is asking about bound Australian. If you can have some more patience with it, it may work out good, like for bound Australian. So if you have some patience, you guys don't invest too much money just in case one trade doesn't work good, then it will not be too risky, okay? You can see here the Australian is a little bit still strong in New Zealand, and the franc started coming down, but the Japanese yen is still really crashing. So JPY pairs, all of them are coming down. It's beautiful sell signal we got in the Australian Japanese yen, pound Japanese yen, euro Japanese yen. So three of them are going really good. The Dow is pushing a little bit higher, but this is not good to continue buying this one. This structure is never continued till it's crashed. There was a big correction, so I really don't want to buy this one at all. Pound Japanese yen did come with the Japanese yen index is coming like down, and British pound index also. So you can see the pound index right here. Okay, it's going sideways a little bit after this big correction. Usually what will happen now, it will keep going sideways before it will come down again. So really, if you want to get out of some trades, pound yen or something, it's your choice. Because the dollar index is still waiting for the news, so the dollar index just keep pushing further down and down. So that's why they're waiting for the news, because of the Feds are gonna announce negative interest rate, and the dollar is just gonna go deep down. Okay guys, so that's something to watch out for. Gold may benefit from this big time, so watch out for gold. It may be benefit from this, what's happening right now. Anyway, you have this euro Japanese yen, and it worked out really good. We have Australian Japanese yen also, it was not too bad. Hi Yola, how are you? Okay guys, let's have some fun at TradingView here. So I'm gonna show you some cool stuff guys. Yeah, guys, the FTSE is going down, so this possibly may be starting. We can look at this one before we go to TradingView. So if we do open that one, after this big uptrend, you may be getting correction down here. After this correction is gonna continue down. Okay, guys. But okay, guys, so now we're just gonna look at the trading view right here. Okay, so we're gonna go to see the dollar index. Guys, Brent oil is 2% down as expected, so watch out, we're gonna be buying this one. The gold is 1% up for the day, possibly you can get another $10 or something up, so gold possibly. Crude oil is only 1.9, it's almost 2% down for the day, so this is cool stuff to be watching. Nasdaq is 103% down, but the SPX is going up. This is really slow. Okay guys, the gold is pushing up, further up here as expected for now. If you're in this trade, probably should move your stop loss to entry. This can't. May end up work good. So the internet is really slow. I can't get to TradingView, fast enough. It's on now, but it's really slow. I just need to get 5G internet. I think it's gonna be cool. So maybe more investors are expecting the Fed to hint a negative interest rate, and that's why they're buying the gold. That could be making sense. Okay. Then if the Feds do confirm this and the dollar get weak, and they push money to the stock market, so the gold is going to be under pressure from the rise of the stock market going up, so the gold wants to go down. But also gold is going to be getting support to go up from a weaker dollar. So you're going to see a lot of volatility in the gold this week. But what I can see now, we're going 1725. So we have given a buy signal from this area. This is going good so far. Expect to continue going like this in a 45 degree or so. It's going good. Hopefully it will reach 70.25 here, 32 area, that area. Then we need to watch it here if it does bounce back or if it's gonna break the upside, especially with the news also from the Feds. Euro yen is probably coming down, but yeah, it did fall really nice in this area. So from this sell we give today, and it will probably. Wow, that's 100 pips. That's nice. 120 pips. That's not bad at all. 100 pips today. You probably guys want to get out because if it drops so much like this, it needs to come back, go sideways, then later on will come to continue. So really, if you get 110 pips, this is the daily average range for Euro Japanese yen, but between 100 and 110 pips, where the Euro dollar is only 70. So really, within one day and only 1, 2, 3, 4 candles, you get 110 pips. You should get out. Okay guys, that's how it's calculated. All that stuff guys is gonna be in the course once we prepare the course. I'm gonna put all that stuff so you really know how you trade, what to trade, take profit if you watching, risk management, lot size and all that stuff. So we're gonna put a really nice course together. So really what interests me now is the gold. And what I can see now, this not really big candles, right? They're waiting some news or they're waiting something right now. There's no action, so they're waiting. At least they're buying gold, that's what you know. So there are more people buying gold, more investors buying gold. So you can see this is going up here. Euro dollar guys, long term is coming down, but this can have a wave up for 150 bips, so you just need to be aware of this. I think we can jump into TradingView now. It's open. So I'm just gonna move the. Okay guys, so now we have TradingView. So right now this is the dollar index. I'm gonna just put weekly, just have a quick look now. Yeah, that's, and you know what, I'm gonna go monthly first. Well, what I have is just zigzag. It's showing you the top and bottoms here, and we want to see 2008 and previous to that time what happened. What I'm gonna do, I'm just gonna leave the zigzag, but I'm gonna take the candles off. Okay guys, so I'm just gonna remove the candles of this stuff, of the dollar index. So just so you know what I'm doing here. So I'm just gonna remove all the candles, but I'm gonna I'm gonna leave this zigzag, which is gonna show you the high and low. So this will be really easy, so we can compare stuff. We need to put some really solid stuff here in 2008 and what's previous to 2008. So that was, we're gonna put a vertical line exactly at the 2008 crash, market crash, right? And so we're just gonna make it like this. Okay, and probably gonna make it look nice. So we'll make something like this. Okay guys, I hope that looks nice. So that's 2008. We want to know what happened previous to 2008, and this will make sense, understand what could happen now. This is a little bit more of, you know, from the central bank behavior. So what we're talking about now, it would fall under the fundamental analysis, not technical analysis, guys. But we're gonna do it in a technical way. So we can't live without technical, right? Okay guys. Oops. Okay, so this is 2005 to 2008. That's when the crash happened. So what I'm gonna type here, I'm gonna type this crash, 2008 crash. Okay, then we have this crash we're having right now. So what I'm gonna do next, I'm just gonna put the 1 period moving average, and I'm gonna put it to the high price. Just show you guys where the dollar is still at that moment right now. I'm gonna make it green because it's a dollar, and probably I'm gonna make it a little bit thick. Okay, so right now we had the coronavirus. You guys, this may be a little bit boring to some people, so just okay. If you guys have any question or anything, please let me know. But this stuff is cool. So 2020, about right here in March, you can see this crash also, right? Okay guys, so what we're gonna add here, so this blue thing is the interest rate. Okay, this is the Fed fund rate, and the numbers at the left side here. So you can see they were low here in 2004 at like 1%. Then they started to increase the interest rate really massive to 5%. And they kept it at 5% for some time. Then comes a financial crisis in 2008 right here. Bang. What did the Feds do? They lowered the interest rate from 5% all the way down to like 0% right here, or 0.205. It's like a quarter percentage or something. It's almost zero. Then, when things start getting better, you guys please let me know if this stuff is okay for you, because this may be boring for some people. So you guys, any feedback here? You guys like that stuff, or this is too much, or what? So what happened here, they came, when things started getting better in 2015, okay, they started to increase the rate again. At that time, Mr. Trump was saying, do not increase the rate, you just should leave it as is. Do not increase the rate. But the Fed didn't listen, and they went ahead and they stopped their quantitative easing a little bit, like they start tapering and decreasing the amount of quantitative easing, and also they increased the rate. Okay guys, so here they start to increase the rate up to here, up to this level. Okay, you can see this. Okay guys, so they increased it up to here, which is about 2.5%. And when things started going down, they started to decrease the rates. Okay, you can see in this small portion between February 2019 till February 2020, which is only 1 year, they dropped it from the left side here. Guys, look at the left side, 2.5% to 0%. Now the historical decision, this is historic. Okay, there is this bottom line at the 0%, which it is right now, right here. This is the area right here, and they're just about the zero. The golden question now, okay, you can see the dollar index. Really, the behavior of the dollar index sometimes is up with the interest rate, sometimes is down. You can see here it's not very consistent all the time. As they increase the rate, the dollar index did go down, okay, but as they decrease it, it did go up a little bit. It did flat, it keeps moving up. Here, when they start increasing the interest rate, there was no much change. It was going up and down in ranging area, right? And here they did crash it so bad, which is just like this one, but the dollar index also is coming down. So really, the correlation is not. You cannot rely on the correlation between the interest rate and the dollar index. It's not that great, you know. It should weaken the dollar index, but really also it will bring money from outside the country to the US, and this may be, give them strength to the dollar index. Anyway, the question now, are the Feds are gonna go to the negative 0.5%? Okay, and is this gonna be the limit? So if we bring this up like here, are they gonna go to minus 0.5? Oh, those lines change now. Should not do. Oh, that works. That's smart. Okay guys, this first black line here, that's at 0 exactly. Should be a little bit higher, sorry, here. Okay. So this interest rate sits right now at 0 exactly, okay? Are they gonna go down to 0.5? Okay, and how this is going to affect the dollar index? Because the dollar index, if you look here, and let's make this different color so just you don't get confused. We'll make it bluish and make it dashed or dotted line. So the dollar index was like at 88 and 2014, okay? And 2008, the financial crisis, was really low here, okay? So if the dollar index is way overvalued, and it did make it has been ranging in this area lately, okay? But are they gonna push it all the way down here to 90? This is a chance, and if this would happen, it would send the euro dollar up really high to 1.17 or so. I don't think this most likely is gonna happen, but with the circumstances we're living and the unpredicted stuff from the Feds and what's going on, this potentially can happen. Very little to happen, but possible. So if the Feds are gonna push the rates to the negative territory for the first time in history, this probably gonna have a huge consequences in the market, So watch out for this. Something to be watching for the next Fed's news. Is very, very important to understand what would happen. A dollar index, it did make like double top in the monthly, which is a huge thing right here. It did bounce from the 103 and this keeps coming down. Are we gonna have a run typical to this one right here when it did crash from 103 to 90? Just straight like this. But at that time the interest rate was increasing, so this would make sense. The interest rate was, and people were going for other stuff. So, but now interest rate is coming down. So that's something cool to watch out for and to be watching out for. And it's probably a lot more fundamental than technical analysis. Okay, cool. Sorry guys, you're gonna have to read the news with me for a minute. You're gonna have to see the same screen I'm seeing when I watch the comments. Okay, Eric saying great stuff. I was saying okay. This is the way to study, yes, beautiful. Mr. Stitch saying here, it's always blessing to watch your analysis. Thanks, man. Appreciate it. Okay, guys. So that's something really to understand where the dollar index is moving and coming from. Okay, this is something to watch. So it did make a double top here in the monthly. Really, this will be something to watch. So try to diverse. How can you take this in consideration? Diverse your risk. Don't go trade only euro dollar just in case it does continue going up. I don't think so, but there's a chance. Okay, so you will be putting some money here and there just in case something goes wrong in the long term. It has a big fundamental move behind it. You will know that you don't lose everything or anything like that. Okay guys, so this is the monthly dollar index, and you can see and that's, we can probably type down here. You can take a copy here, move it. Crash. So, okay guys, so that's what happened in 2008. The Feds did lower the rate. Why they do lower the rate? Because they want to make it easy to borrow money from the banks. Okay, to borrow money from the bank, it will become much easier That's why they need to lower interest rate. So that's what they're doing now. But after they lowered it to zero, right here they were at 5%, so they did bring it all the way down to zero. Okay, now they were already at 2.5 last year, and they did bring it to zero. But that's maybe not enough. What else they can do? They can do quantitative easing, which they print more money and they buy more stuff. Just injecting money to the economy. Another choice they can do, like Japanese bank, and they can go to negative territories where they can make negative interest rates. So we have Switzerland is running negative rates, and we have Japan is running negative rates. Some people saying it's not good to run for negative rates. Negative rates are really bad for banks because they don't make much money. They just don't make good profit. So you will sacrifice the financial banking systems making profits to really help the overall economy. Okay. So that's something to be watching for. And watch out the previous time when the dollar index was at that price, the interest rate level was down here at 1%. Okay? Just something to keep the eye on. But most likely if it's gonna come down, push down all the way, you can see this area was extreme support and resistance right here. So I think this will be the huge support and resistance area. You can see right here was something to reverse from. It will come back, it make like in the way here. Then when it comes back, it does go to this area, which is the 91 level, bounce back to 72. It goes back to 92. It's like bounce back. And then once it did break it, the 90, it did go to the 103, double top at the 103. Then maybe in the next 2 years or something, we come to 91. If this is going to continue going down, if it's not going to be ranging here. So this is a longer term forecast with the Feds and the fundamental analysis and stuff. Okay, guys. So yeah, let's. I think that's enough for this stuff. It's maybe. So all I'm saying here is that if the rates go to negative, the dollar will rise. Well, look at the history. Really, here when the interest rate was going up, the dollar really did double first, then it did come down. So there is no relationship. There is no big correlation. So there is no huge correlation between the interest rate and the dollar index, right? You can see it. So this was constant, and that was moving between like 70 to 88, which is a huge amount. And this was constant. So this was not really affected by the interest rate. Okay guys, so we're back here, we're looking at the chart, so we'll have a quick look, update. You guys, if you have any question, please let me know. So guys, I advise to take profit 110 pips right here, because this is the daily average for the Euro Japanese yen, and we talked about this before, so you probably should have got out 15-20 minutes ago on it also. And if it does go up to here, then maybe offer another opportunity. EuroCAD is going in the channel as expected, which we discussed this when you were here. We said it's gonna come all the way down. It's gonna hit this proven support, which is retested 7 times. It's gonna break it. It's gonna go even lower. So our target is around 1.5, which is still 120 pips below that number. So we have given signal from right at the top. We actually were watching the signal to go up from here all the way. We waited 1.5 days to go up here. Once you get this reversal candle, we sold right here, and that's going fantastic. It's beautiful how can you guys read the analysis charts and stuff. That's really nice. And with this one, we expected to come really strong with the news, and we expected this one to go really slow. So even with timing, you would expect how much time it would take, support and resistance, structure, waves, and all that stuff. You can fundamental analysis, index analysis, like Euro index analysis against the Canadian index analysis, forecasting the news for the CAD, forecasting the effect of the fundamental going on in Europe, in the Euro itself and in the DAX, because it's gonna push the Euro down, but it's gonna make the DAX go up. So all that stuff you put together to get a really nice sell from here all the way down here. So that's beautiful stuff. Okay guys, that's interesting. Gold is okay. So watch out, gold is going to be really volatile this week. You guys have to be careful, especially with the Fed's news. Pound dollar probably going to keep ranging till the dollar decide where it's going to go. You guys, how beautiful this is. So probably now we should start considering buying of the oil. So this wave did come exactly here to this exact area. And now we are waiting to reverse from here or have one more push down to down here, then take it. Isn't that fantastic? So if this will start going back up, and watch out, because if the Dow is gonna decide to come down tomorrow, it doesn't look like it today, but if it decides to come down tomorrow or something as a prediction, it may be pushing the oil another $2-3 down. So watch out for this. So if the Dow is gonna come down, it's gonna drag the oil with it down. New Zealand franc, it's probably sell. Okay, but I don't like to trade too much of franc, guys. CHF, try to avoid as much as this currency is so much manipulated by the banks. So really, you want to avoid as much as you can. Okay guys, so let's get back to our fun stuff. Yep. So if we add the US 10 years, this is the US government bonds for 10 years. Guys, this one here, which is in black, and let's take the dollar index first. I'm gonna take this off, and I'm gonna take the dollar index also off. There. Okay. I'm gonna leave the Fed fund rate. Also, I'm gonna take this off. Okay. So this is the 10 years bonds. which is really the government makes for people to buy and sell and stuff. Yes. Okay guys, so let's get back to this chart. That is just Australian index is reversing back a little bit because the stock is not doing a correction yet. So watch out for this one. I have to change the screen first. Okay guys, I think that was enough headache for you guys today, so probably it's more than enough headache. Sorry about this, is too much headache stuff. So yeah, I think that's a good sell to continue coming down. It was beautiful technical analysis, this chart. Looks so good. Keep the eye guys in euro, in the oil. We highlighted this area from before, so now possibly is a good buy. So we expect it to come retest this area and start going back up. So watch out, this could be a really good buy. Either from here or from a little bit lower level, it depends. But if you want to take a small lot size and later on take another small lot size if it does come down, just take it as investment. You don't have to go so heavy. And the dollar index just keep pushing down and down, it's non-stop. The euro did crash so bad, you guys see the euro index is crashed so bad. So you can see euro is really weak. That's why euro Japanese yen did come down. So bound index, I told you after this big crash is gonna probably have to go sideways till tomorrow London session. So that was the end of the market. Frank also after it did touch this trend line, it's coming back down. But I think it's gonna have another wave to go up to this trend line, down this green one. Turquoise one. GBY index also did come enough for today. It may continue down in Tokyo session maybe after 4 hours from now. Canadian index it did come down a little bit with the oil, but just about time to reverse. So that's maybe you're gonna find the euro CAD is just getting a little bit more momentum to go down. So I hope this makes sense. Australia and just still, you know, in this correction area is not really moving much. New Zealand probably is the same, you know, but New Zealand may have a wave up. Okay guys, that was the end of this for today. I hope this was not too much headache for you guys, and we talked a little bit fundamental stuff about the dollar index and how can the interest rate push it up or down if it comes to be negative. Okay guys, thank you, and it was my pleasure having you and joining me today. Thank you, and have a wonderful good day. So it's just about 1 hour and 12 minutes now since the start of the stream, so I'm gonna give you guys a break and hopefully you can see you tomorrow. I thank you for joining, and if you guys, anybody want to download our systems, available on our website www.fxmarketstrategy. So you guys are most welcome if you want to join. Okay, thank you, and have a wonderful day all of you. Please stay safe. Goodbye. Thank you.